Hey, what's going on, guys? This is Jose here at eXp Realty, and also the owner of Credit Inspire. Real quick, I wanted to talk about late payments on your accounts that show up on your credit report. I can't emphasize enough how much late payments can destroy your credit scores. Okay, um, it doesn't matter who you are because it happens to the best of us, whether we're just on top of our credit or not. It could just be that one circumstance that distracts you just enough where a late payment occurs and gets hit on your report, and you see your scores significantly drop by 80 to 100 points. Okay, it's that drastic. Okay, and what happens is that in a lot of cases, it takes time for your credit score to heal itself again and go back to where it needs to be. And what I've seen is that if someone has a late payment on their account, one of their credit cards, let's say, it typically takes that person a good 10 to 12 months from that recent payment that occurred for their scores to kind of recover. And that's assuming that they didn't have any other late payments since that incident occurred. Now, you might ask yourself, why are late payments so just, they're just such a deal killer when it comes to credit scores? The way the different algorithms in these different credit and monitoring services look at a recent late payment. And when I say recent, I'm talking about the past 12 months. The way that they look at it is that they look at it in the perspective of behavior. Okay, and what I mean by that is that if you've been the person who's paid your account on time for a couple of years, your behavior demonstrates that you are someone who's responsible and pays on time. And as soon as you have a late payment, the algorithms that dictate your scores, the algorithm picks that up as something that's super significant in calculating your scores. And because it's a recent action that just occurred, it penalizes your behavior and therefore penalizes your credit scores significantly. Okay, because it's a recent indication of something that can be going on in your life that caused you to not make this payment on time. Okay, and this could very well be someone who might have lost a job. It could be different things, right? And it's just an indicator and a trigger to other companies that might be borrowing you money, a mortgage company, an auto loan, that you had this late payment, and it allows those companies to really kind of question you as to what occurred. Now, it's not to say that you lost a job, but it's just a trigger. And the trigger is directly received by these algorithm computers or calculations, if you want to call it. And it just so happens to be that the emphasis on the credit score will affect you a great deal. Okay? So, for those who are listening to this video or this podcast, the one thing that you need to know is that whether you have flawless credit or if you're working on your credit and getting the scores to where they need to be, it is absolutely important that you not even minimize, you want to avoid having any future late payments on your credit report. And because if you do have one, it can really just set back any progress that you could be making. Okay? And that's how much of an impact it can have. The best thing that you can do is to only use one card. That way you can only have to remember one specific date and put it on your calendar, both in your computer and on your cell phone, because we are on those items all the time during the course of the day. And make sure it's a reoccurring event on a monthly basis. Now, obviously, if you have more than one account, you're going to want to put all those due dates on all of your calendar, all those dates on all those accounts in your calendar, so that you don't forget Obviously, you always have the option of adding a withdrawal from your bank account or a debit card. That's always a smart thing to do, and do it at the minimum, because at the end of the day, I would say that even if you had $30 in your savings account or your checking account, and let's say they take $35 for the minimum payment, yep, you might end up with a -5 balance, and yes, you might end up with a $30-40 NSF fee. But I would rather take the NSF fee before I take $100 hit on my, or not $100, sorry, before I take an $80 to $100 point decrease on my scores, which is much more significant than the $40 negative balance. Okay, but obviously you want to keep everything in order. Keep everything to a minimum in terms of how many accounts or credit cards you're using. Set up auto draft if you have to, and more importantly, put it on your cell phone calendar and your computer calendar, so that you can be reminded of these payments that you have to be made. I'm guilty of forgetting all the time, as much as I prepare, but these are some of the things that you could do so that you can try to remind yourself of paying these bills on time and avoiding late payments, so that you can save yourself the trouble of not having to get discouraged because you saw your credit score decrease. I hope this was helpful for you guys. It's a big topic that we talk about a lot in how we prepare our clients, regardless if they're going through the process of getting pre-approved for a mortgage or actually enrolled in our credit repair program. Hey guys, if you guys like this video, of course, show some love, comments, likes, and share. We can use all the support we can get. We are a new video podcast coming out and launching all these cool topics about credit and the home buying process. We can use all the help we can get. I'll talk to you soon. See you on the next one.